which is a concept. Here's another guy who helps people out. He's a hedge fund titan in his own right, Bob Dahl. He follows all this action and these underpinnings. To what Charles was saying, Bob, this stealth bear market, you know, a lot of folks say, yes, what Charles is saying is true, but you really need to see it in the overall averages to get this cleansing so we can get to that next level. What do you say?
So I think an up market is dependent on improvement in earnings, dependent on the consumer spending some more money. I think we'll get
signs of that?
The job market's
we were
a bit
seeing
better,
some signs of it.
Some wage rate increases. I think that the energy dividend that Americans haven't yet spent will be another source of some spending. That's the necessary condition. You're absolutely right. We have seen a lot of stocks, the breadth of the market's another way to say it, has really deteriorated. But on the other hand, there are stocks that have moved up a lot. Today we've seen Amgen, Expedia, good earnings lead to higher stock prices. So, kind of for every one that's gone down, you might find one that's gone up, and that's why the averages have been flat. Stock market's up 3% year to date. Not a great year, but a good one.
What do you tell people after a crazy month like this where the averages kind of finished off as they began? Because in the middle of that and in the 30 days in between, crazy.
Yes. This is not the first month this year we've seen that. In fact, you might say the whole year's been that way when the market's essentially unchanged, up a skosh, if you will. But we've had a lot of volatility. Greece, China, Fed uncertainties, economic growth uncertainties. That's the stock market. You've got to have a long-term time horizon. If this in-between fluctuations gives you too much angina or can't sleep at night or whatever your issues are, you're in the wrong place, or don't listen to me talk. Just invest and hold it for the long term.
Do you look at the interest rate hike to come as a sell-off event for the markets, or is it so widely anticipated that it won't be a big deal?
Because it's 0 to 0.25%, Neil, I think we're making much ado of nothing. Nothing's a little strong. For bond investors, it's a bigger deal. But I think when the Fed raises rates, it's actually some verification, some agreement that the economy is doing a bit better. We're standing up on our own 2 feet. The deflation risks that were so prevalent are finally in the rearview mirror, and I think stocks will be okay. When we wake up the day after the Fed raises rates and find out the sun rose, I think we'll breathe a collective sigh of relief.
Yeah, I guess that depends if it's one and done or there's the start of a steady trend up. But we'll watch closely. Bob, always good seeing you. Thank you.